This is the Best Stocks to Buy podcast. We use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week. This podcast is made possible by Connor Management Group, a registered investment advisor firm. If you've been enjoying these podcasts, we're sure you'll like our Saturday morning newsletter just as much, if not more. It is informative but light and includes personally curated articles on investing, money, and just plain leisure fun that we think you would enjoy. Just visit our website at www.connormg.com and click on newsletter to subscribe. All right, on to our presentation. Hi everyone, this is Mathis Connor with Connor Management Group, and this week we're going to look at the best dividend stock to buy right now. Today is Monday, May 25th, 2015. And here on the opening slide, we see that this company is in the semiconductor equipment and materials industry, and we see its 6-month upside potential at 13.5%. On to the next slide, we see that the name of this company is called Applied Materials Incorporated. And if you've been listening to this podcast for a while, you know that Applied Materials Incorporated was also rated the best dividend stock to buy right now last month in April of 2015. There have been some changes, but we go through a lot of stocks, and it is still our best dividend stock to buy right now. As mentioned, this company is in the semiconductor equipment and materials industry, and we see a 6-month upside potential at 13.5%. Just for a quick update, since last month, the stock has pulled back about 10%. It's come down about $2. And the main reason for that pullback were for two reasons. Number one, the U.S. Justice Department did not approve a planned merger between Applied Materials and Tokyo Electron. So there was some sell-off as a result of that disappointment. And additionally, while its latest earnings did beat expectations, the company's management has pulled back on its projected earnings a bit. So its outlook is not as robust as was expected, but in the grand scheme of things, it still has a great outlook, and we still feel pretty good about this stock pick. On to the quick facts slide. Here's the business summary description for Applied Materials. Applied Materials Incorporated primarily produces semiconductor wafer fabrication equipment. So these guys make the equipment that make all these memory chips and circuits and things of that nature. They have 4 dominant product areas. Number 1, chemical and physical vapor disposition. It creates the layers, conducting or insulating films on layers. Epitaxy, I'm not sure if I pronounced that right. It forms a pure silicon layer on which circuits are constructed. Another product area is etch, which inscribes circuits on wafers, and the final product area is called ion implementation, and it alters the conductivity of different wafer regions. The website is www.appliedmaterials.com, just as it sounds. The company is headquartered in Santa Clara, California. They were founded in 1967, and they have 14,000 employees. On to the products and services slide. As described before, there's not too much that goes on here. They are equipment manufacturers doing things at a very, visually small scale. Things you can't readily and easily see. I mean, you have pictures here of some of their manufacturing equipment. On to the metrics slide. Over the last 12 months, Applied Materials revenue was $9.2 billion. The net income over the last 12 months was $1.2 billion, and their cash from operations was $1.5 billion. So, yes, they generate some pretty strong cash flow. The operating margins in 2014 were 20.9%, and in 2015, they are expected to be 23.0%. That's a nice increase. Onto the valuation metrics. The trailing PE ratio right now for Applied Materials is 18.0, and the forward PE ratio is 15.0, and that implies that analysts still expect earnings to make a substantial increase, and this is despite the lowering of expectations by management. The PEG ratio is at 1.3, not too rich. Anything around 1 is expected to be a value opportunity. The price to sales ratio is at 2.7. The price to book ratio is at 3.1. And the enterprise value to EBITDA ratio is at 12.0. The dividend yield, we do consider this a dividend stock, is 2.0%. And the average dividend payout ratio is expected to be 42%. So 2.0% is the middle of the road for dividend paying stocks, and we like the stock for its dividend, its financial strength, as well as its upside potential. On to the price chart. As we described before, Applied Materials has been modestly volatile stock. Over the last 12 months, the stock is now down 2% from where it was 12 months ago. Additionally, the stock experienced a recent pullback from around $22 down to now around $20 as a result of the canceled merger and pullback in earnings expectation in the near term. So the stock has pulled back a bit, but we believe its story is still very good, and we also believe it is a very strong and solid dividend investment right now. On to the next slide, the why now, the bull rationale. Well, part of the reasons why we're bullish on Applied Materials is that its revenues per share is still expected to increase this year compared to last year, as well as its cash flow. We expect to see a significantly stronger cash flow increase, as well as its earnings per share. So we've got basically increasing sales, and additionally, their capital expenditures are expected to decline, which frees up cash flow for the company and which benefits shareholders. And as a result, we see the near-term valuation metrics declining a bit, which will put pressure on the stock to increase. So for those three reasons, basically increasing sales and revenues, declines in capital expenditures, and low valuation metrics in the near future are the three reasons why we believe this is a good buy right now. On to the summary slide. The financial statement quality of Applied Materials is excellent. I mean, the company's total debt is just under $2 billion, and their net profit this year is going to be about $1.5 billion. So they could take out all of their debt well within 2 years without a problem. The operating margin trend, as we mentioned, the operating margins are projected to increase from 20 to 23%, which is substantial. The price pattern trend, it's basically flat. It's down about 2%, but that's just due to a recent pullback. We'll consider that a flat. The market outlook we also consider flat right now, although we do have some concerns about a modest pullback. We are seeing more overvalued names than undervalued names, and we're just not seeing a lot of opportunities for upside. So the recent closing price for Applied Materials was $20.14. Our 6 months price target for the company is $22.66. So that gives Applied Materials a 6-month upside potential of 13.5%, along with a very respectable dividend of 2%. So for all these reasons, we believe that Applied Materials is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Just to close, remember that Connor Management Group is a registered investment advisor. In addition to being a source of quality stock investment reviews, We are money managers, not financial planners. Our sole goal is to grow our clients' savings and retirement accounts in a personalized manner as quickly as possible using one or more of our strategies. We can manage all or just part of your IRA account as well as a regular taxable account. Just visit us at www.connormg.com to review our service or just give us a call at 281-947-2201. Have a great week.